This week, global markets were a total roller coaster. Let's break down what just happened.
So why the huge mood swing? How did we go from all-out fear to cautious hope so fast? Okay, first up, you gotta know the two big mindsets, risk off versus risk on.
And for most of the week, fear was totally in charge. That's a classic risk-off vibe.
The big worries? A long U.S. shutdown, weak economic data, and plunging consumer confidence. And tech stocks really felt the pain. The NASDAQ dropped nearly 3%. Ouch.
So where did all that nervous money run to? It went straight into so-called safe havens.
Gold, for instance, absolutely surged, shooting past $4,000 an ounce.
This really sums it up. Investors were just looking for safety from all the uncertainty.
Gold wasn't alone, though. We also saw a big rush into currencies like the yen and Swiss franc.
But then, late Friday, everything changed. News hit about a potential deal to end the U.S. shutdown.
And you can see the split reaction right here. Industrial stocks rose, but tech was still shaky.
This tiny rebound was a huge deal. Hope was starting to beat out fear, even just a little.
And this wasn't just a U.S. story. The shift sent ripples all around the globe.
Just look at the currency markets, a real mixed bag of reactions to different economic news.
Over in Europe, though, the pessimism stuck around. Most major markets ended the week down.
Meanwhile, oil prices took a hit. There were just too many fears about oversupply.
Okay, so how are the pros playing this? What are their trading strategies looking like?
Real quick, let's define two terms. Bullish means you think prices will go up, bearish means down. So the report is bullish on gold and some stocks, but bearish on oil and the British pound.
Now, this isn't financial advice, right? It's just a snapshot of how traders are positioning themselves.
Which leaves us with the big question. Is this a real recovery or just the calm before another storm?